This is Matthew Cratter from Trade University, and today I want to talk about a unique property that only Bitcoin has. If we think of regular commodities like corn, wheat, oil, copper, which are inputs into a lot of industrial processes, you have this situation where when prices are very high, as commodity traders say, the cure for high prices is high prices. In other words, if corn prices are higher than normal, farmers will choose to plant every last inch of their fields in corn rather than planting them. Maybe the previous year they planted wheat or soybeans. They'll substitute corn because they can get more per square footage than they would planting wheat or soybeans. So they'll plant a lot of corn. Maybe they'll knock down that old barn or clear out a field and plant some corn there too. And so what happens, the higher prices themselves lead to a much higher supply of corn. When that meets steady corn demand or even lower corn demand, prices will fall. This is why most commodities are mean reverting over time. They revert to their average. And the way it works is you can have low prices. If commodity prices are low, then fewer people will be willing to produce them, either plant them or mine them. So you have less production. You'll end up with supply shortages, and then supply shortages lead to higher prices. And as we talked about, high prices lead to more production, planting more corn, for example, which leads to an excess supply and lower prices. This is how commodities work, and it's a very nice system. You don't have some centralized authority pricing things as you did in the Soviet Union. And as such, under the capitalist system, we're lucky we have a good supply of most of these commodities. This is the long-term price chart of corn futures. In other words, corn, I'm looking at the front delivery month here, the front futures contract, and we can see that we do have these big spikes in corn prices, followed by crashes. And then you'll spend some time around the mean, you'll stray away from it, and then you'll revert back as corn supply increases. And if you've ever traded commodities or been in a hedge fund that deals with these, you'll know that there's a lot of time spent tracking USDA supply numbers, demand numbers as well. Here's an article from today about futures traders looking at the excess supply of corn, because corn price has been high, and now the corn supply has increased. So this is how traditional commodities work. But what happens if you have a commodity where the supply cannot increase that much, even when the demand for the commodity is high? In other words, when prices are really high, what if the supply of that commodity is unable to increase by very much? Well, if you have a situation like that, it looks a lot like gold. We can see, compared to the corn chart, which is very mean reverting, gold definitely has an upwards trend. It sometimes takes decades, but it's basically trending from the lower left part of the chart to the upper right part of the chart. And this is simply because when gold prices are high, it is still very difficult for gold miners to increase the supply, even when demand is high and when prices are high. Another way of saying this, which I often talk about, is that gold has a high stock to flow. Stock to flow is just a measurement of this same thing we're talking about, where you have the amount of existing inventories, in this case, the gold that's above the ground in vaults, divided by the annual production. And the annual production of gold is fairly steady, even when prices are low or when prices are high. And this makes gold really unique, and this is why we have such a thing as precious metals. Gold has a higher stock to flow than silver. Silver is another precious metal that was pretty much demonetized in the late 19th century when Germany moved from a dual metal standard, what's called bimetallism, got rid of their silver and moved to a gold standard. This was the birth of the modern age of countries holding gold and being on a gold standard. And so we've had this situation before where we had a commodity that had a higher stock to flow that did not respond to higher prices by a huge increase in supply. We had one commodity, gold, really displacing silver. If we take a look at the stock to flow of various metals, we can see that gold has the highest stock to flow, 62, silver is about 22. Things like palladium and platinum have much lower stock to flows, and as such function as worse stores of value. A store of value is just a way of transmitting wealth to yourself in the future. If you have $100,000 today, you would like, when you retire, if you're going to save that $100,000, you would like it to have the same purchasing power that it has today. And storing it in real estate or gold or stocks, these have all functioned as stores of value. And the really nice thing about gold is it's unlike corn or copper. High prices do not mean a huge increase in the supply. High stock to flow commodities make the best money in its function as a store of value. If you're finding this video helpful so far, I'd encourage you to hit that subscribe and like button, and also share the video with a couple of friends. Maybe in this case, if you have a gold bug friend or a farmer or someone who's into commodities, they might find this interesting. Now, Satoshi Nakamoto did a thought experiment. This is back from the original Bitcoin Talk forum, and this thought experiment was such. As a thought experiment, imagine that there is a base metal as scarce as gold, but with the following properties. Boring gray in color, not a good conductor of electricity, not particularly strong, not useful for any practical or ornamental purpose, but it had one special magical property. It could be transported over a communications channel. This shows very clearly how Satoshi was thinking of Bitcoin as an up-to-date form of gold. Now, gold does have industrial uses, but there's still a very small percentage of the demand for gold. It's about 10%, where silver has many more industrial uses. It's counterintuitive. A lot of times people, especially who are new to commodities, they want to invest in commodities that have a lot of use. Now, obviously, most commodities have a lot of real-world industrial use. Gold is the one really weird one because though it's used in electronics, it doesn't. Most of the price of gold is attributable to its function as a store of value. And the way economists say this is they say gold has a monetary premium. If this monetary premium were ever to disappear, the price of gold would go down anywhere from 50 to 90% because it would just have industrial demand driving it rather than monetary demand. Now, Satoshi was a very smart cryptographer and a smart economist as well. And he obviously had done a lot of thinking about gold. And so he created something that's very much like gold. It's called Bitcoin. It was the first scarce digital asset. And the special, unique property that it has is that it takes gold to the next level. The Bitcoin money supply is perfectly inelastic. It does not respond to price at all. The price of other commodities, as we saw with corn, certainly does respond to, or the supply of other commodities certainly does respond to the price. Gold, much less so, which is why it has this unique property as a store of value, or it has historically. Bitcoin takes that to the next level. No matter what the price of Bitcoin is, Bitcoin miners will mine the same amount of Bitcoin every day, when prices are high, when prices are low. And when prices are high, there's no supply adjustment. Contrast that with crude oil. When crude oil prices are high, suppliers pump a lot more. When corn prices are high, farmers plant more corn. When Bitcoin prices are high, Bitcoin miners cannot mine anymore. There are 144 blocks in the blockchain that are mined every day by Bitcoin miners in the Bitcoin blockchain. And there's the miner's reward, which is associated with this 6.25 Bitcoin per block. You can do the math at about $50,000 per Bitcoin. 144 blocks mined every day, 6.25 new Bitcoin per block. That gives us 900 new Bitcoin mined every day. And this is regardless of the price of Bitcoin. Even when Bitcoin prices are high, miners cannot produce anymore, unlike corn and other basic commodities. And what makes this even more of a supply squeeze is that after every 4 years, this amount of new Bitcoin that's produced is halved. And so after the 2024 halving, there'll only be 450 new Bitcoin mined every day. This makes Bitcoin very, very unique. There's nothing like it. And whether prices are high or prices are low, Honey Badger don't care. The supply of Bitcoin is perfectly mapped out. The max supply is 21 million. The issuance is the 6.25 Bitcoin every block, and then that falls every 4 years. As such, Bitcoin right now has a stock to flow that's roughly equal to gold in the high 50s. After the next halving, it will have the highest stock to flow of any asset that has ever existed in the history of humanity. We can see here using Plan B's model that even with the current stock to flow, fair price for Bitcoin would be close to $100,000, $99,000 per Bitcoin. So this is one way that on this channel I valued Bitcoin, and this is how, using Plan B's model, we can see Bitcoin prices going to into the multi-millions, going to 3 million by 2028. If we take a look at the chart of Bitcoin, it's really unlike the chart of anything that I've ever seen before. If we go from corn, which is mean reverting, to gold, which is up and to the right, at least it's been pretty dead in the water for the past 10 years. It may be in the process of being demonetized by Bitcoin in the same way that gold itself demonetized silver. But nevertheless, this is not a price. This is not a chart that responds to prices with a huge increase in supply. And Bitcoin takes this, as I said, to the next level. The chart is much steeper, much more parabolic, and to the right. And we have these step functions that occur after each of the halvings as the supply shortage kicks in. Now, of all the cryptocurrencies, only Bitcoin has a monetary policy, a future supply curve that is credible and fixed. Ethereum is claiming to be ultra hard money, but the problem with Ethereum is it's highly centralized. You can make 2 phone calls and shut it down. You just call Amazon Web Services, and in Infura, you can shut it down. And it's also does not have credible monetary policy going forward, simply because it's changed its monetary policy every few years. It's really whatever Vitalik decides he wants at the time, and he really drives. He has the bully pulpit, and he can drive all the other developers to get on board. No other cryptocurrency besides Bitcoin has this credible monetary policy. Things like Cardano and Ethereum and XRP and any other coin you can mention probably has a large pre-mine in which insiders gave themselves huge holdings, and and these are very centralized. And the future max supply is not as believable as it is with Bitcoin. Bitcoin had this, you could call it an immaculate conception, where the founder disappeared very early on, and it has functioned in a completely decentralized way. There's no one in charge, as you would have with Cardano has Hoskinson, and Ethereum has Vitalik, etc. And these are single points of failure. So in addition to having credible monetary policy going forward, Bitcoin has the proof of work algorithm, and it has the strongest, the highest hash rate. And as such, it provides the most security. Cryptocurrencies that use proof of stake are simply not as secure as proof of work. And they really do recreate the existing fiat financial system, simply because the more Ethereum you have, the more ETH you have, the more you can stake, and the richer you can get, and the more influential you can be on the ecosystem. Now, one might answer and say, well, gold does have this credible future supply, and I don't think that's true, simply because technological advances could lead to increasing the supply and new extraction techniques, and so we cannot really be sure what the future money supply of gold is. This is a big risk, and we see this every once in a while in the news. Here is an amazing story from this year from the Congo, where villagers discovered literally a mountain filled with gold, just discovered this year. And unlike Bitcoin, where it's all in the algorithm, we know what the future supply is. The future supply of gold is quite uncertain. There may be more gold mountains. There's a lot of gold under the ocean. There's a lot of gold in the asteroid belt, etc., and comets, etc. And so it's a little bit more difficult to map out, whereas Bitcoin is algorithmically mapped out. In addition, as we've talked about in other videos, gold is very expensive and difficult to send, to store, to verify, to assay, and it's not verifiably scarce like Bitcoin. We live in a digital world now. There's no reason for shiny yellow rocks. And I think this is one reason that gold has really failed to keep up with central bank money printing as a good hedge over the past 10 years. It's being demonetized by Bitcoin. And this makes sense. We live in a digital world now. You don't want to be sending shiny yellow rocks around the world. It's much easier to beam money around the world. And this is what Satoshi was talking about when he says that this is a special kind of gold that can be transported over a communications channel. All the demographics work against gold and in favor of Bitcoin. Millennials will sell any gold that they inherit from their boomer parents and presumably buy Bitcoin with it. If we view Bitcoin as a commodity that's ultra scarce and has this future credible monetary policy, we can see that Bitcoin is literally programmed to go up. I repeated it 3 times here to really drive it home. There's this meme that Bitcoin has number go up technology. It's a meme, but it's also true, and it's been borne out by the price chart, the historical price chart of Bitcoin. This looks just like a commodity that is programmed to go up, very much unlike traditional commodities like corn and gold. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.